Wow. Okay, so you see a number sometimes, and it really jumps out. $3,317.90
Per ounce of gold. Yeah.
per ounce. April 16th, 2025, that's a record high. It makes you stop and think, what on earth is going on?
Exactly. How does a metal get to a price none of us have seen before?
Right. And that's what we're digging into today. We've pulled together some really interesting reports to try and unpack it all, the politics, the economics, what's driving this huge surge.
And crucially, what it means, for people trying to make sense of the financial world.
Yeah, the key insights. So it seems like this perfect storm brewing, doesn't it? Not just one thing.
Oh, absolutely. It's like a whole web of things, political worries, these big economic shifts happening.
Yeah.
It's all sort of pushing gold into the spotlight, making it look very, very appealing right now.
Okay, so let's break that down, starting with the political side, maybe. The sources keep bringing up the U.S. and China. Trade tensions?
Right. That's a big one.
President Trump launching this investigation. Tariffs on critical mineral imports. How big a deal is that in the grand scheme of things?
Well, it's pretty significant. These aren't just, your run-of-the-mill trade disputes. It signals something deeper, maybe a real fracturing of supply chains, more protectionism.
Ah,
So for investors, or really anyone watching global stability, that level of uncertainty, it makes you look for safe places to park your money.
like gold, the classic safe haven.
Exactly.
Hmm.
And what's interesting here, it's not just about, say, steel tariffs. It's about critical minerals, technology, control over the future, really. That suggests a longer, maybe more fundamental shift than just a temporary spat,
Right, a decoupling.
which could be why the move to gold feels a bit more structural this time, less temporary.
And China's not just taking it, are they? The reports say they're heading back. Retaliatory measures?
Precisely. They've put their own duties on American goods, so it's this tit-for-tat thing, and it just, ramps up the uncertainty even more.
Makes sense.
The World Trade Organization is even putting out warnings, saying these tariff wars could actually reverse global trade growth. That kind of instability. It just makes gold shine brighter, doesn't it?
Yeah.
As something outside that whole system.
Yeah, outside the potential crossfire. And it seems like it goes beyond just tariffs, too. I saw notes about the U.S. restricting tech exports, AI chips, NVIDIA, that kind of thing.
Yeah, that adds another layer. Another point of friction in the U.S.-China relationship. It raises questions about, tech collaboration, global economic ties.
And injects more uncertainty.
Exactly. When big companies in key sectors get disrupted by politics, it creates this unease, this nervousness in the markets. And nervous investors often look towards gold.
It's not just investors, though, is it? The little guys, I mean. Central banks are making moves, too.
That's a really important point. Yes,
Yeah.
for 5 months straight now, central banks have been buying more gold, especially China's central bank.
5 months, okay.
That's a huge signal. It really suggests a strategy, a deliberate move to diversify their reserves, move away from relying so heavily on the U.S. dollar.
And when the big players, the central banks, start buying serious amounts of gold.
It puts upward pressure on the price. Simple supply and demand, really. So yeah, it's not just private investors reacting. Governments are making strategic choices here too.
Okay, so the political climate is definitely tense, but the economic side is just as important here, isn't it? The dollar, for instance.
Absolutely crucial. The U.S. dollar, it's hit a 3-year low. That's a major economic driver right there.
Right, because gold is priced in dollars.
Exactly. So if the dollar is weaker, it means gold becomes cheaper for investors holding other currencies, makes it more affordable for them to buy.
Which increases demand and pushes up the price.
Got it.
Simple as that sometimes.
And then there's inflation. Feels like we've been talking about inflation forever. Still a concern. Oh, definitely. It's still very much on people's minds. Persistent inflation fears are a big factor. Gold has this traditional role, right, as an inflation hedge.
A way to protect your purchasing power when money's losing value.
Precisely. When those fiat currencies, government-issued money, are eroding, gold tends to hold its value better. So as long as inflation is a worry, gold's likely to stay attractive for that reason.
Okay, this next one feels a bit weird, though. The reports say the anticipation of the Fed cutting interest rates is also pushing gold up. How does that work?
Yeah, it seems counterintuitive, doesn't it? But think about it like this. Gold doesn't pay interest. It just sits there.
Right, no yield.
So when interest rates are high, holding gold has a higher opportunity cost.
Yeah.
You're giving up the interest you could be earning on, say, bonds.
But
But If the market expects the Fed to start lowering rates soon, that opportunity cost goes down. Suddenly, holding gold doesn't feel like you're missing out on as much interest elsewhere.
Making gold relatively more attractive.
Exactly. Compared to those bonds or savings accounts, that will soon be paying less interest.
Makes sense. And then stagflation. That word sends shivers down my spine. Stagnant growth, high inflation. Why is that scenario so good for gold?
Well, stagflation is sort of the worst of both worlds for traditional investments. Stocks often struggle when the economy isn't growing,
Right.
and bonds get eaten away by high inflation. So in that kind of environment, gold, which doesn't depend on economic growth and isn't directly hurt by inflation the same way bonds are, it starts to look like a really solid store of value.
A safe place when other options look shaky.
Precisely. A way to trim preserve capital.
Okay, so we've got the political jitters, the economic shifts. It's all creating this environment. But how are people actually reacting in the market? What are we seeing?
Yeah, the market behavior really backs this all up. We saw huge inflows into gold-backed ETFs in the first quarter of 2025.
Exchange traded funds. Right. Ways for people to buy gold easily.
Exactly. Exposure to the price without holding the physical bars. And the inflows, $21.1 billion worth, 226 tons. Highest since early 2022.
Wow. That's a serious amount of money moving into gold.
It shows a real shift in investor sentiment. People are actively putting their money there.
And not just ETFs, right? We already mentioned the central banks.
Yeah, definitely worth repeating. Those central bank purchases are direct support for the price. It signals their long-term strategic view, and that kind of institutional buying power, it really moves the needle.
It feels like confidence breeds confidence, doesn't it? I saw that fund managers are now calling gold the best performer this year.
That's right. Sentiment is powerful. When a lot of professional money managers are bullish on gold, it tends to attract even more investment. Sort of a self-fulfilling thing, in the short run anyway.
And the charts show it. 25 all-time highs this year alone, 13 of them above $3,000. That's just staggering momentum.
Those are called technical breakouts. They're significant. Breaking those big round numbers, like $3,000, often acts like a psychological boost.
Attracts more attention, more buyers jump in.
Exactly. It signals strong, sustained buying pressure and reinforces that upward trend.
It almost feels like history repeating itself, or rhyming maybe. The sources compare this to the rally back in 1980, during the Iranian Revolution.
Yeah, that comparison is interesting. It really highlights gold's historical role, doesn't it? As that go-to asset during major geopolitical crises.
The ultimate crisis hedge.
The fundamentals might be different each time, but that investor psychology, that flight to safety in uncertain times, it seems pretty consistent through history.
So let's pivot a bit. For someone listening, maybe thinking about their own money, their own portfolio, what are the big takeaways here for precious metals investors?
Well, first off, I think it really hammers home the value of diversification, especially now. Gold can act as a sort of counterweight in a portfolio when other things, like stocks, are volatile.
Right. Don't put all your eggs in one basket.
Exactly. And second, with some of the worries swirling around government debt and bond yields. We touched on U.S. Treasuries briefly. Gold is emerging as potentially a preferred alternative for some risk-averse investors.
Instead of bonds as the default safe asset.
For some, yes. There seems to be a bit less confidence in treasuries as the ultimate safe haven than perhaps there used to be, leading some to look more closely at gold.
And beyond just safety, it's also about protecting against currency value drops, isn't it?
Absolutely, especially with the dollar weakening. Holding gold can be a hedge against that depreciation. It helps preserve purchasing power, particularly if you have international investments or concerns.
You mentioned central banks earlier. Is there a lesson there for individual investors? Should they try to mimic what the big banks are doing?
Well, it's definitely food for thought. Central banks manage massive risk and take a very long-term view. Their increasing gold holdings suggest they see real value there for mitigating currency risk, geopolitical risk.
So maybe individuals should consider that rationale too.
On their own scale, yes. It suggests gold has a strategic role to play, not just a tactical one. It might be prudent for individuals to consider if a small allocation makes sense for their own long-term goals and risk tolerance.
And I guess, bottom line, it offers some protection when markets get choppy.
That's a key strength. Its resilience during market turbulence. It can help cushion the blows when other asset classes are taking a hit. A potential volatility shield.
Okay, so looking forward then, what should people be watching? What are the key things that could move gold prices from here?
Number one, keep a close eye on geopolitics, especially U.S. China relations. Any further flare-ups there could definitely add fuel to the fire for gold.
Makes sense. What else?
Interest rates. What the Federal Reserve does next, or even signals it might do, that directly impacts gold's opportunity cost, like we discussed. Rate cuts would likely be supportive, hikes less so.
And the dollar itself, obviously.
Yep. Keep tracking the dollar's strength or weakness. Continued weakness would likely help gold, particularly for international buyers. A surprise rebound in the dollar could act as a headwind.
And inflation, is it going to stick around?
That's the $1,000,000 or maybe $300 to $300 question. Persistent inflation reinforces that hedging argument for gold. If inflation really starts to cool off, though, some of that demand might ease up.
Right.
So the inflation trajectory is definitely key.
And finally, those central banks. Just keep watching if they keep buying.
Exactly. Their ongoing actions are a big signal of long-term confidence. If they continue to accumulate gold, it provides a solid underlying support for the market. So yes, watch their policies and purchases.
So, okay, wrapping this all up, this crazy record price for gold. It's not just one thing. It's this really complex mix. You've got politics, like the U.S. China friction,
Big factor.
and then major economic stuff, the weak dollar, worries about inflation, what the Fed might do with rates.
All interconnected.
Yeah, and it's feeding into how people are behaving in the market. Big money flowing into ETFs, central banks buying, pushing gold up as this, well, safe haven and strategic asset.
That sums it up pretty well. It's a multifaceted situation. And yeah, the way these political and economic forces are tangled together is really what makes this rally so noteworthy and worth understanding.
Which brings us to a final thought for everyone listening. With all these forces swirling around, politics, economics, market sentiment, pushing gold to these new highs, what role could gold play in your own financial picture moving forward?
Good question.
And maybe thinking even broader. Beyond gold, are there other, maybe less conventional assets out there that could offer similar kinds of diversification benefits in this, well, let's face it, constantly changing global landscape? Something to chew on, definitely.